Elite Lag Report. Joining me for the hour is Jason Raznick, who started a little company called Benzinga, which we'll get into. Jason, introduce yourself here to the audience. Who are you? How'd you get interested and involved in markets? And why news? Why market news?
Yep. So my name is Jason Raznick. I've been passionate about the markets for many years. When I was in college, I lived on East University. I pretended I was East Capital, like a hedge fund. I'd reach out to small cap companies, ask questions, and then I'd go on to Yahoo message boards and talk about these stocks. Not pump them, but just like talk about them. I ended up generating like a decent sized following, and I didn't know what I had at the time. Like, people loved my research, and if I said something, the stocks would move. I had like $5,000 or $10,000 to my name, so I wasn't really leveraging it. But many years later, I'm like, why isn't there an agnostic provider of news to the small cap space? Like, all these other companies are covering the Facebooks, the Googles, etc., but they weren't covering the smaller companies. So I thought there was an opportunity to get better information from smart people across the world. So like, people think the smartest people are in the newsroom. I don't think that. I think a company like Benzinga can compete with big players because the smartest people are not necessarily just in your room, and you can find experts. For example, I know this is a long answer, but there's a guy named Tim Melvin. He's this community bank investor. In 11 years, he just does community banks. So they're small companies. It's not a strategy. It's not a hedge fund strategy because these are $70 million, $100 million market caps. But he's never had a losing pick because he buys where the tangible book value is like undervalued. And that little strategy is just a guy located somewhere. And I'm like, how can we crowdsource that? Can we give better news, get better information than just, the press release? And that's kind of how it sort of came together back in the day.
How do you go about finding contributors? So you allude to, right? You need to have people that are smart, intelligent, that probably have some skin in the game. That's a lot easier said than done.
Yeah. So it didn't contributors. Well, it was like part of it, but it's going to places where you see people that may be passionate. Like, so me posting the Yahoo message boards, I was passionate about stocks and small caps. So it's going to that, finding that person that maybe is at home who knows HubSpot better than anyone else and can give that color. And you don't need to depend on a Goldman Sachs research report. That's kind of how I go about it.
All right. Now there's we can argue a certain degree of cynicism when it comes to news in general, and certainly sort of traditional financial media. A lot of news may be interesting, but most of the time it's irrelevant, right? In terms of a portfolio. I mean, I think that's not really that debatable. How do you try to get information out there that's not necessarily just actionable, but worthwhile from a predictive standpoint, right? Because there's a lot of headlines that they just don't mean much.
Yeah, I mean, you said news is irrelevant, or that's not debatable. I would disagree. I think news or content is very relevant. I mean, if you're a technical trader, then you may not use it. But like, for example, why I got back into HubSpot big is because all the news was so negative on it. So it served as a contrary indicator to me. Or why I bought Crocs, because there's a contrary indicator. It's also sometimes where Tesla, if you're just, Tesla, if you're using the news, like to make trades on it, you're probably doing pretty well. Because when it's the most negative, it's always been a time to buy. When it's most positive, it's been a time to sell. And so you can look at it that way. But what I would say is news is noise in some respect. So news can be noise, and it's up to, we at Benzinga and Benzinga Pro, we focus on providing the relevant headlines or content that could move a stock. We want to be able to answer, if a stock is moving, why is it moving? It's one of our top products that we sell. We license, and we're the largest licensor of news to the North American brokerage space. So you name it, Fidelity to Schwab to Robinhood, Webull, Lightspeed, etc., Morgan Stanley. They're all customers. And our why is moving product, you want to know why something's moving. We provide it. We have a whole team that works on it. We try to remove the noise. But yeah, there is a lot of noise. So sometimes using that noise to your advantage can help you, have an edge in the market.
Talk about how the great financial crisis, how that period made you realize this is a direction you want to go. I mean, I have to assume during that time, you yourself seeing what, not just with hindsight was obvious, but the housing bubble, and then the Federal Reserve sort of denying it for a while, and the media just saying the Fed's probably right. I have to assume that was a motivating factor for you.
Well, so that's interesting. That's kind of when I started Benzinga. So what's interesting though is this. A while ago, I did mortgages for like a year and a half, and I'm like Washington Mutual giving these option arms. I was shorting the market, but I didn't have the longevity of it because I was, they come out and said, "Oh, we're just taking this much of a loss." Well, then Washington Mutual ended up going to zero, but I didn't know that I didn't keep the longevity. And when starting a company, I think you have to like kind of ignore the macro part of the market times and just realize that things are cycles and they're going to cycle up, cycle down. It's never as good or never as bad, right? And so, like when this whole thing with the housing bubble, 2008, it's frustrating because everyone's looking at houses going straight up, and eventually, because mortgages were so easy to get, you could get $1 million house with like a $50,000 income, and put zero down. Eventually, this shit was going to hit the fan. Just eventually. I mean, if you think of crypto or Bitcoin goes up when more people buy it. Housing stock goes up when more people buy it. If they don't, then it goes down. It's not like it produces a dividend. It's not like Bitcoin produces a dividend. So it's like there's a trends on news. I mean, when Bitcoin was at $67,000, or I forget the high, but everyone's like, "Oh my god, I can't believe I don't own Bitcoin. I'm going to buy some Bitcoin." And then what did it do? It went down to 17 or 16. That's where like it's really hard to time these things. But I also think when people are so euphoric about certain thing, it's time to take a step back and say, maybe I did it. Now, listen, you're going to be wrong sometimes. Like Tesla, you would have missed like a 200-point rally if you thought, oh, it's euphoria. So it's hard to catch it. But what I've learned is you dollar cost average into things, and you don't need to go big and put all your money when something's already up so much.
How challenging is it to balance sort of a bearish view with a bullish view? And I say that because I always go back. I've said this example so many times before, but I think you'd probably agree with me. There is a correlation between ratings in the media, page views on websites, and the VIX. Right, the more volatility there is on markets, people want to know what's going on. They want to see what's causing markets to usually go down when the volatility is elevated. And to me, that always makes it seem like there's a bias, right, with a lot of news organizations to tilt towards more bearish, negative narrative stuff because that gets more attention. How do you think through that dynamic? Because I think it's really challenging to, build a news organization and be optimistic.
Well, optimism comes from different things, right? Just looking at new innovations that are out there that, from Chat GPT to solving problems that weren't solvable at one point. I mean, medical cures. But how do you balance it all? I mean, it's dosages. It's that same thing I said before, like that euphoria, and then the trend snaps, and then people move on to the next thing. I mean, what I've learned, I guess, Michael, is one big thing is that people's attention span is very short, very short. It was, seems like a year ago when all the stuff you would see on TV was about Idaho, the college murders, and that was only thing was talked about. Now I don't hear about that, and it's such a it's like that's just one thing. The Fed, Powell, okay, when he stops raising rates, you're not going to really hear about him. I mean, it's happened with Alan Greenspan, and they say don't fight the Fed, and so when they're raising interest rates, the market can go up, but my viewpoint is when the market was 0%, you really had nowhere else to get returns except the market, I guess, and real estate. Now with the rates being higher, there is alternative to a stock market. It is investing in bonds or municipals or other asset classes. So it makes it harder for the stock market to go up. Big institutions can get yield for 5% by buying a T-bill. So I think about that when buying stocks, and I try to find good companies that can weather the storm, which is easier than said and done,
So in a year like this year so far, which has been a pretty good one, and granted it's only February. It's like I love when people say year to date I'm up this much. It's like year to date is 5 weeks. Okay, let's cool ourselves there. What's been some of some things that you guys have put out that have gotten some interest and attention? Do you get a sense that now that we had this horrendous year last year, that there's a degree of excitement, optimism? Is the negative narrative still pervasive? Is the analysis change at all?
Well, so I do think that people think that that there's a rally going to happen right now. I think that when you saw Facebook come out with such strong numbers, people think there's a rally, and and then stock buybacks going to happen more with the cash on the sidelines. So I think people are trying to position themselves for this to be a big rally year, because it's very rare when 2 years in a row the market goes down like it did before. So the downside, if you look at history, is lower than in the past. The way I personally look at it, though, is, again, you're going to get FOMO. I mean, FOMO, fear of missing out, neighbor next door. The way I look at it is, if you want to sleep at night, then you really, like, I know you may believe in a company, but if you want to sleep at night, how do you diversify? Have your money. Let's say you have $100,000. Okay, $100,000 to your name. Let's just say that was in liquid assets. Okay, so put 50,000 in a bond or a T-bill. Put 25,000 in conservative like stocks or bond or dividend things, and then 25,000 to play around with, and like the Crocs. My Crocs buy, yes, I'm up a lot in the Crocs buy, but I don't have a ton of money in it. So I'm up 108% on it, but I don't have a ton of money in it because it to me was not the no brainer. Like the risk, there was still risk there, and so even if the market's going to, so the way I look at it is, I guess it's like poker, probabilities, like blackjack. So if there's this percent probability the market's going to be up, how much you want to take a bet on that? This percent probability the market's going to be down, how much you want to bet on that? So that's kind of the way I look at it. When I bought HubSpot, it was a much safer pick for me at the time, based on cash flow it was generating. I mean, I really studied the numbers and what the business was doing, and so I took a bigger bet. But that's kind of how I do it, like how you would almost play poker or blackjack.
Yeah, no, and that makes a ton of sense. Are after that, just from the FinTwit side of things, as much as people can argue I've been right or spot on with a lot of things, I still think there's a lot of bearish sentiment. I put a poll out asking, is the bottom in or is the bear market over for stocks? And 70% of respondents said no, that the bear market's not over, which is why the pain trade, from a contrarian perspective, is probably up. I'm curious, why do you think so many people are still cautious or maybe not believing in the rally? I mean, by some metrics, you can argue that we've been in a bull market really since June of last year, when most of the big cap companies kind of bottomed.
Yeah. So when it was bad last year, it was bad, and I think that stings people. I think there's sting. So I think that's why you may see that sentiment being so negative. So when you lose money versus make money, you remember that way more. And so the feelings of last year, I think, reverberate to this year. When I talk to people casually in person, they're like, yeah, there's no catalyst for the market to go up. Okay. There's no catalyst. What I've seen in real life, though, is people buying these rallies, buying the Facebooks. I don't own Facebook. I'm not buying the rallies. I have my stable stocks, and that's what I have. But I think when you get stung so bad last year, at least the retail investor, I think it's hard to change your positioning when you see the Fed raising interest rates, and you have that fear of, hey, just going to plummet again. People are going to sell off. What's the catalyst in the market? See, there was catalyst in markets. Like, so during COVID, the Fed was giving all this money out. All this money was being given out. You had catalysts, you had backstops, you had call options in the market. And so now you're a little more out there on your own. And I can understand why people would say there's no catalyst, and they're trying, like the Fed's trying to have more unemployment, right? They're trying to the market to slow down. So if that's the case, then the market should go. The Fed's almost trying to make the market go down, right? And so, how do you play that?
Well, that's interesting, right? Because you're right. People always want to point to a catalyst, a reason for why stocks do what they do. There was a study done in the, I think it was late '80s, early '90s, that looked at the top 20 or 30 biggest up days for the Dow and biggest down days for the Dow, and then looking at headlines on those extreme up days or extreme down days, and from the Wall Street Journal, right? And something like only half of them had any kind of attributable reason to it. So, the reality is you don't need to have a reason for why markets do what they do. The human mind wants to find a narrative, wants to latch onto something. But I think that's also where a lot of people get caught up in why they should buy or sell. They think they need some news event to hit, but in reality, a lot of things are either discounted or move off of things completely unrelated to headlines.
Yeah, no, I mean that's true, and then you try to find a reason why it happens, and sometimes you can't. I mean, can you explain to me why Tesla went from 250 to 100, then to 190 in last 2 months? I mean, you really can't, other than say, okay, Tesla lowered its prices and the cars, and so they're going to outcompete the other companies because they have much higher margins. Well, everyone already knew that. Everyone already knew they had higher margins, and it was over time they're going to reduce prices. This stuff was already known. But then the question is, well, what's known to the average investor? Well, who knows? And so, like, this whole thing with Tesla moving up back, like, was it known? Is it the numbers? Is it, I mean, it all started when they lowered their sales prices. So it just, you try to make these things fit into your own narrative and try to make sense.
Right, exactly.
And try to make it make sense of it.
Right, exactly right. And everyone's obviously talking up their own book. Now, I know you're a fan of Tesla.
Well, I was a much bigger fan of Tesla before, like, so I had a very sizable position in Tesla, and then about 7 months ago I didn't renew my Tesla lease, and I got a different electric car, and that's when I started selling my position. So it was my biggest position by far. It was way weighted in my portfolio. I probably sold 40% of the position, maybe 50%. And so, I mean, I even sold some at lower points where it's at now, but mostly higher. And I thought again, this was one of those things where I've learned through, bruises and heartache. I'm in crypto, and I've learned it's never good to be in one stock too much. I mean, yes, maybe it goes straight up, but it also can go down. So I lowered my risk in Tesla. But yes, I am a fan of Tesla, but I got frustrated that the Model S, the outside, hasn't changed in 10 years. And I was like, feel like it was due for an update. So I didn't get another Tesla.
I'm curious, how much of Tesla's stock price movement is because of fans of Tesla versus fans of Musk? Because there are two different reasons to buy the company.
I mean, I think fans of Tesla and fans of Musk are sort of like together. If you're a fan of Tesla, a big fan of Tesla, I think you're probably a big fan of Musk. So I know people sold Tesla off when Musk was selling shares for the Twitter purchase, and they believe that Twitter is going to distract Musk. So they have been selling Tesla because he's not focused on Tesla. But I think if you're a huge fan of Tesla, then you usually are a big fan of Musk too.
Yeah, it's always just interesting to me how hyped people get around Musk and Tesla. I personally can't really fully understand it. I mean, even on Twitter Spaces, it's like the moment you mention Tesla or Musk, it gets so many more listeners. And to me, it's like, all right, I mean, that's one company. Let's talk about things which are more important than just one company.
Yeah, I hear you. Musk has been Albert Einstein, inventor, Thomas Edison of our year right now. I mean, from SpaceX to, so one of the reasons my position in Tesla was so big was because I read Ashley Vance's book on Elon Musk like 7 years ago about how he was trying to get a rocket to launch and NASA wouldn't let him. So in the middle of the night, they would break into places and it was raining and they would put rockets under like a house and like it was crazy. And so he was able to like get rockets to launch, and they're like down to their last money, and like they were able to get these rockets to launch. I'm like, if he can make rockets launch, he can for sure figure out Tesla. And so I stayed in there because of this one book. But that's where I became. Reading that book was one of the more motivating things I've read, because it really just showed me like, if you don't give up, you can try to figure out a way. But I hear you. The media, is an inordinate amount of time, and that's why I started Benzinga, because at the time, like, everyone was covering Facebooks of the world, and they weren't covering the small caps companies, and so like that's one of the main reasons.
All right, so let's go a little bit more. Let's take a step back and talk macro from a news perspective. The big thing this year is everyone is seemingly shocked by the strong labor market, better than expected. I keep going back to this point that I can't imagine the Federal Reserve didn't know that was going to be the case, that Powell didn't know before he started speaking that was going to be the case. I mean, they've got more models than anybody can possibly imagine. And somehow people on Twitter who just draw lines think they understand more about the economy than the Fed. Maybe they do, but I'm a little skeptical. What's your take on where we are from an economic cycle perspective? Do you think the concerns around inflation resurging are valid? Do you find that people are gravitating towards articles around the return of higher inflation? What are your thoughts there?
So what I don't get with this whole thing is they're raising interest rates to stem inflation, okay? They're raising interest rates to stem inflation. So that's historically been the model. Raise interest rates, and then people won't spend as much, the economy will slow, and think about it. So when you raise interest rates, what slows down, I guess? Think about what industry slowed down. So manufacturing, where they, getting loans, industrial, tool, I guess, real estate, people to do new developments, it gets more expensive. It gets tough there. The problem is that effect is not usually seen immediately. It's just not. I mean, there's other ways to stem. I think a lot of this inflation also has to do with supply. The supply chains are improving, but in some areas they're still not improving. And so I feel like there might be other tactics that could be taken instead of just raising interest rates. I don't right now, I don't see this. Like, a lot of people are forecasting a recession at the end of this year. Okay, I know JP Morgan is. They're forecasting like a recession, and that rates are going to fall because the Fed's going to be forced to make them fall because it'll be a recession. I'm not on that page at this point. I don't see that recession at the end of the year. I see the Fed raising rates to slow down the economy. That's what I see. I don't know if there's any more tools in the toolbox, but I just don't. I just don't see it at this point.
Yeah, and I think also a lot of people have been conditioned to think that higher rates are bad for the stock market, when in reality, prior to QE3, that's the way it was supposed to work.
Right, it's true too. Yeah, that's true too. So you're saying prior to QE3, like higher rates, it wasn't supposed to be at 0% rate. It's a good point.
Right. No, and I keep hammering on this point. So my point is that people got so used to the idea that low rates are positive for stocks rather than higher rates are a reflection of a better economic growth trajectory for stocks.
Interesting. Yeah, I mean that's interesting too. I mean, and that's a great point, because that if you go over the last 60 years, I mean, maybe the answer. How often were rates 0%? I mean, very little, right? Like probably never, almost, right?
Right, exactly right. So it was. I mean, it's true. If you can argue that COVID was an anomaly, but the real anomaly was the last decade.
Yeah, the last decade, and so maybe we're at a more normalized thing, and where the markets and will continue to grow, and I mean, with the stock market and interest rates being higher are okay. I mean, the other part of thinking about it is with a little bit higher interest rates. Well, I know brokerages make more interest income, that's for sure. I mean, Robinhood, it's probably a few $100 million a year difference right now for them, just with the higher interest rates.
Right. And my point is that these are the things which it's like everyone automatically assumes higher rates are negative. It's not. I mean, it's a lot more nuanced than that. There are going to be some winners because of that. And listen, the truth is higher rates do make for more efficiency. All right. When you had Tina, there was a lot of inefficiency, and we still have to deal with all these zombie companies. No disagreements there, but part of the benefit of higher rates is it does force companies to be more effective, right, to deal with a higher cost of capital.
Yeah, I mean that's true. That's true. I mean, higher rates do cause companies to be more efficient, higher cost of capital, and that's what also affects employment. So if the Fed wants better employment numbers, or better, or worse, that helps, right? Higher rates do that, and then makes companies more efficient. That's true, and I mean that's where you may see more people a lot of restaurants still are delivery only because they can't find the employees. Maybe that'll help the dynamic.
Let's talk about some of the things that you're observing as far as where people are clicking and what kind of topics they're trying to search for on Benzinga. Because I have to assume that analytics are a big part of any news organization. Any kind of interesting trends that you're seeing from people going to Benzinga and what they're actively seeking?
Yeah, I mean, we have a lot of personal finance, like best savings rate content that people are looking up. In terms of stock market, you're going to hate when I tell you, you're still getting a ton of, Tesla. You're still getting a ton of, what was I saying? You're still getting a ton of people looking at is like Facebook trend. Is everyone else going to continue to, follow the Tesla trend and Facebook railing? Other stuff that we're seeing that's a little more nuanced is a little more in the biotech space. There's and I guess I should mention if I own a stock. Like, so I this whole thing with this diabetes and these medicines now and these shots that help for fat cells people are taking. So Ozempic and several others. It's owned by like NVO and Lilly LLY. You're hearing me say it. I know people have been talking about it. I think we're just in the top of the first inning with those kind of stocks. These ones that help people lose weight. Losing weight is like I think a $60 billion industry. There was never medication that was available really for people to lose weight. These medications reduce insulin, which helps you lose weight, and they are the rage. And I think you'll start seeing them in the numbers in the next 2 quarters. When people are doing more research or looking for opportunities. Other stuff we see a lot of people looking for dividend, safe places to put their money, that kind of stuff.
Yeah, which but yeah, you and I both know that term "safe" is a loaded term, right? in this business.
100%. I can tell you more. I mean, I don't know. I'm on the credit committee of Voyager, so the Voyager bankruptcy. I serve on the UCC, the credit committee. What a job. And yeah, because I thought I was invested in this USDC, which was 1-to-1. I thought it was as safe as my money in JP Morgan. It was idiotic of me, I guess. When you can get paid at 8%, 9% interest rates, it's too good to be true. And I should have been out of there a long time ago. But yeah, so I know safe is, you got to use that word judiciously.
Yeah, no, and I say that because the sort of fundamental argument would be that safety comes from fundamentals and valuations. The thing is, like a lot of these defensive sectors, utilities, staples, healthcare, they are relatively overvalued to history. So even though the beta might be lower, the company fundamentals would argue they're riskier than you think.
Yeah. So great point. Utilities. I bought DTE Energy. I think I am down. I know I talked to you about winners, and I think that's like you can cherry pick. I bought DTE as my safe investment. Okay. Let's see. I'm down 7.39% on it. And I have so I bought DT Energy as my safe play, and I bought Crocs as my risky play. So DTE, I do it by unit size. So I use a 1 to 5 units sizing systems based on risk and versus safety, what I think it is. So I bought 2 units of Crocs, like this is 6 months ago, and I bought 3 units of DTE. Crocs is up 107% since I bought it. DT is down 7.39%. So to your point, Michael, yeah, I thought DT was a safe one, and it turns Crocs was the, I guess, higher beta, a lot more, volatility. But did I expect DT to be down 7% when I was buying it for a safe and getting a dividend? No.
Yeah, no, exactly. Right. I mean, that's the point. It's like these definitions can be fluid.
They can. But the likelihood of DT being down 60% versus Crocs, I think there was more likely that could happen with Crocs than DTE. It was my viewpoint, and I like the dividend. But yeah, I mean, that's why you don't put all your eggs in one basket. I mean, that's why you diversify. So, Michael, like, let's say for HubSpot, let's say my analysis says that could be $1,000 stock, and I was like, and then my base case is like, oh, it's gonna be a $500 stock. I still wouldn't put my eggs in all in one basket because you never know what's going to come out. But fraud, I mean, being at Benzinga, and we have a whole new news desk, and we see things all the time. You never know, and it's like that. Diversify and having patience, unless you're day trading, and that's like where you want to pounce on these things. I mean, I love that The Big Short, how they did all the research and they went deep, and the markets disagreed with them for a long time, but then they eventually followed them. And it's just, if you have the time to do that conviction, if you don't, maybe you buy your mutual fund, maybe you buy an S&P index fund. Like there's a lot of different ways to do this stuff.
Let's talk about maybe some of the other bigger themes that you guys are trying to hone in on more. Infrastructure is one that I think is intriguing from a multi-year cycle perspective. I'm not sure if it brings back the commodity super cycle, but certainly, that's a tailwind for commodities overall, given aging infrastructure, not just in the U.S., but globally. What are some of the things that you're focusing on, maybe on the infrastructure side or other emerging themes?
So when you say infrastructure, you mean like taking care of like bridges and that kind of stuff, caterpillars?
Yeah, exactly.
Yeah.
Right.
So I like the Caterpillars of the world that supply the equipment. Cities and states have a lot of extra money. Biden and the government gave a lot of money to these different cities, and they're spending it and they're finding ways. So I feel like you're pretty secure with like tractor companies, suppliers to to these companies. You can buy commodities. I think you'll still be fine there. I think construction is still a hot sector. I think you'll see some slowdown, but not vast. I mean, look at what ExxonMobil, I think it was, at 40 billion in profit. And so like old line industries make money. Like, to be honest, my DTE being down 7.93%, you said it's still high beta, but or higher than they traded in the past. If that goes down 10%, I probably will buy more of it because I don't think DTE energy is going away. But I like buying the vendors on the infrastructure stuff, the third parties that supply equipment, and they do it by lease, so they get a nice recurring model of revenue. But like, here's an infrastructure play that's not infrastructure like you're talking about. Twilio, TWLO, text messages for like Uber and all those places. To me, text messages is like infrastructure to a lot of digital companies. It's different than what you're asking me. I own a very small amount of it, very small. It's like doing nothing, but I just think like I like being in the back end of things. I like being in the things behind the thing. And when the growth takes off in other industries and these companies are behind them, like a Caterpillar is, then I like that.
Yeah, no, I love that point. I mean, I think you're spot on that end. What other things are people focusing on? So I know you've done some coverage on the AI side, Chat GPT. I feel like everybody's doing that nowadays. When you see a lot of, just from experience, when you see a lot of interest by people visiting Benzinga in a particular buzzword, does that make you think that the hype is overdone? That it's sort of just a short term blip in people's attention spans around that, or is it sort of the idea that maybe it's a sign of a real investment trend to play going forward?
So, like, the hype is crazy on it right now, 100%. And usually the hype will die down, but it's crazy on it. And like the way that we do events too. So we have a Benzinga Cannabis Capital Conference in Miami, and like we do these events. But the reason I'm bringing that up, not just a good gratuitous advertisement, but it's in 2013, I think it was, we did a cannabis event. And what we learned was there was a lot of companies that were not real. They were like frauds. They just added the word cannabis or something to their name that they were part of the cannabis space, but they weren't. They just added that name that to their name. You're seeing a lot of public companies now add in AI, chat, GPT, whatever. They're adding this into their name, and so there'll be a lot of hype here. I guarantee right now as we're talking, there's people in trading rooms on Discord servers looking for the next penny stock that's going to add AI to their name and trade on it on the hype. That's what happened with like the whole SPAC rage, what's happened in the EV rage, that's happened in lithium. It happens everywhere. So it's buyer beware there. But yeah, I mean, usually when this stuff happens, it's overhyped, then goes down a little bit,
Happened during .com too, right? You'd have companies that would put .com after their name and suddenly they go up, 50%.
Yep.
Right, the day after in the late 90s.
Yep.
It is funny how that works.
Yep, absolutely. It's exactly what and it continues to happen. And it takes full advantage of people being excited for the next thing,
Cannabis is an interesting area to go with for a bit. I'm curious, why do the conference around cannabis in general? I mean, it's been a tough space, obviously, for 2 years now. It peaked around the same time as the speculative tech stocks peaked in February 2021. What's the thinking there? Why the focus on cannabis?
Well, two things. One, there was a lot of noise and you don't know what's real. We're really good at matching investors and companies. So we've helped facilitate over $1 billion in transactions at our events. We also focus like fintech, crypto, healthcare, different small cap verticals. Cannabis is a newer industry. We like to jump on trends quickly, and then the other media companies follow us. I mean, I remember when we first were doing it a few years ago, the other media companies wouldn't mention the word, and then they end up hiring 2 or 3 writers to focus on it. We report and let people decide. So we used to say, here are the facts. Here's the who, what, where, why. And if you believe this, you can look at Benzinga and take action. If you believe that, here's ways to take action on it. There's going to be short-term rally, short-term blips in the market, and it's been down for a few years. And I do think you're going to find the winners, and you'll find plenty of them. But it's not easy when a new industry is created. I mean, think about all the car companies. What were there, like thousands of them, and then there was like 3. So it's the same kind of business.
Yeah, and it's interesting. I forget who I had on a space before, but they alluded to the idea that conference attendance can be a really good contrarian signal. right? So like if you get a lot of people hyped around a particular investment theme, a conference focused topic, and it's oversubscribed in terms of the number of people, that's typically sort of the near the top, right? Whereas if a topic that's covered in a conference doesn't have as much attendance, that might be a bottom. What's the interest been like on that? I'm curious. So, and I preface this by saying I actually think that the space could itself be due for turnaround. Partially that's market related, partially that's related to sentiment. But do you get a sense that the sentiment maybe is so bombed out that there's just a contrarian trade there?
Yeah, I mean, like our attendance has grown over the years, and so it's hard to say with us because it's grown and it wasn't like didn't ever like necessarily bottom out. I mean, our event is really about deal making instead of like just about speakers. I mean, when you go to our event, you're making deals. Like that's what Benzinga is known for. Where we are the place where if you come to one of our events, you're gonna find a deal. You're gonna find a customer. We had a fintech event, crypto, and like at our fintech event, I know of 6 deals that closed that were like multi, hundreds of thousands of dollars. One was over $1 million. So it's hard to use us as an indicator for that. But I think as less interest is in the cannabis from a retail investor perspective, yeah, I think you're going to see some big winners. I mean, TerrAscend started rising back up. I see other ones rising. There will be big winners, especially the ones that learn the business, learn how to keep costs low and make money. I mean, that's at the end of the day, why are these stocks going to go up if they make money, right? It's not that hard of a business to understand. If you make money and you grow, you're going to have investors.
Right, but you do also need the Safe Act passed, right? And you need to get the federal side fixed up on that.
I don't know about that. I think that could be a negative, actually.
Lay that out. That's okay. Yeah, let's go with that because I think that's what everybody seems to be wanting for a catalyst. Speaking about catalysts from the start of the conversation.
2 different things. One's the banking, one's federally legal. So banking, sure, federally legal. If it goes federally legal, then you have Budweiser's coming in all these places looking to wipe out some of these cannabis companies. So without it being federally legal, I think it gives these cannabis companies a good head start to really carve their niche and carve their part of the market.
Yeah, no, I can see that. Right.
I mean, and I know some of the cannabis companies would say that too.
How about on the fintech side? Again, that's something which seems like a lot of the attention, excitement, has kind of slowed down, died down, coinciding with the cryptocurrency collapse. Is there still a lot of activity that you're seeing as far as entrepreneurial endeavors in terms of smaller businesses?
There's definitely, both. The fintech space is still strong. It's different than what it was before. There was so much money being thrown at it. It was, it's definitely changed in that regard. You have to be making money. You have to be profitable. Like I just said, making money, same thing. But you have to build a real business and not just have an idea. There's a lot of financial sites, and you got to be strong at what you do and solve a problem for the consumer. There's still a lot of problems out there for the consumer that you can solve with this iPhone or whatever phone. And I still think we haven't really hit like the third inning in fintech with solutions that can be out there. I mean, at the end of the day, why is it if you want to just get money on your savings account, what the interest rate JP Morgan pays is 0.50. Like, I don't know how much money is sitting in JP Morgan's savings account. A lot, significant amount. JP Morgan is just printing money. You're putting money in savings in JP Morgan at 0.5 and they're lending it out at 7%, 8%. They're printing money, JP Morgan, right now. Why? Because they can. Because it's not that simple just to move your money out of JP Morgan and go there. Yes, it is. You can go do that and do things, but like wait till this stuff just happens and you are able to not have to click buttons to do that. That's when really solutions are out there. If you had a tool that just automatically did that reallocation for you without you having to do anything, that solves a problem. That's an example of, where I think FinTech go. At our FinTech event, we had more companies apply for our Benzinga FinTech Awards this year than we ever had. And we've done the Benzinga FinTech Awards for 8 years or 7 years. And this was it's bzawards.com. You could see all the companies that applied. This was our 7th or 8th year doing it. So, it's one of these things that I think will keep going, but it's harder to raise money unless you really have a niche or experienced team or profitable.
Talk about emerging trends for a bit, and obviously, you with starting Benzinga are clearly very good at spotting, some of these trends. What's some advice you'd give to people to help them identify where an emerging trend is forming, right? Because most people tend to buy into the emerging trend when it's already had a big move, in which case then they put laser eyes on Twitter, and then that typically tends to be sort of a short-term top. Are there certain sort of characteristics that make you, focus on certain areas which nobody else focus on?
So tell me about those laser eyes. I just saw laser eyes on someone else. Who did
Well,
I?
that was a thing from like I think 2020, late 2020, late 2021. That's part of the reason why I have lumber and gold eyes. I was poking fun at the laser eyes thing, which is sort of a signal that you're going to keep your eye on the prize, that Bitcoin and cryptocurrencies will keep rising. And the thing is, then you start getting celebrities putting that on Twitter. And the moment I myself saw that, I said that's got to be a top. It's like, if everybody's invested in a certain theme and it's that prevalent, is probably a bad sign from a contrarian perspective. But my broader point is, if you're gonna, most money is made at the start of a trend, not in the middle, or obviously certainly not at the end of a trend. So the question really is, how do you identify emerging trends? And I don't mean necessarily in the public stock market, just from the industry perspective.
Yeah, I mean, I guess it's paying attention. I mean, it's truly paying attention. It's whatever that guy's name is. Who's the guy that says Peter Lynch? Like, it's paying attention. That's what when Apple came out with the iMac with the blue translucent case many years ago. I sat at a Comp USA store for like 4 hours to watch reactions to it, and that's how I look at emerging trends. When Apple came out with those things, and everyone had those white things, in their ears, that was a huge, trend that you can just, if you watch people get in the subways. So those are ways to, capture that kind of stuff. At least that's how I do it. I try to pay attention.
Yeah, which is harder and harder to do when there's so many distractions and things that are just kind of keeping us off the ball. Maybe for the final few minutes here, Jason, talk through to the audience the kind of things that you think people should be focusing on in terms of sources. I always go back to this line I keep saying, amateurs look to the right of the equal sign, pros look to the left, which in my world means go to the source. Don't just go for the conclusion, see what goes into the equation. There's a lot of sources for news, there's a lot of sources for information, and a lot of people just see the headlines and that's all they care about. How should people think about trying to get a better understanding of the way markets work by finding the right sources?
I mean, sources are like you just alluded to. You said the industry trends. It's the same answer there in some regard, because industry trends, sources, is paying attention to people. It's paying attention to what's really happening. It's paying attention to your kids. If you have kids, I bought Tencent 42% ago because we had my daughter on the Benzinga afternoon show, and all her kid friends were playing the Stumble Upon or Stumble Guys, or I think it was called. And Tencent owns it, and it was just the biggest no-brainer like trend. And when they report earnings, they talked about it. And so when you go to the sources, yeah, Benzinga is a source of news and data. We provide corporate calendars, we provide events, we provide content, the whole 9 yards. But you know, you want to get direct. You want to make sure not to read biases. Like a long time ago, I was watching Fox Business. This is when I was like in 2002 or something. And not Stuart Varney, one of those anchors made a comment about a stock, like a negative way. I'm like, okay, guess maybe I'm too euphoric about this stock. Maybe it was Tesla. Maybe it was one in 2002. Maybe it was like 2010. I don't remember. But my point is that thing when I was young, and I let him influence my decision when he was just making a side comment, didn't really know the company, influenced me, and it shouldn't have. It shouldn't have. He probably said, "Oh, Apple's too high," when the iPod was coming out. Like, who knows? And so sources are your direct eyes. It's talking to people. It's coming up with conviction, doing the research. When I buy HubSpot, I bought HubSpot. Benzinga, Benzinga has been out there basically trying to get direct, like, to the companies. What we do, we don't just like aggregate news. We talk directly to the CEO of Royal Caribbean, to EV stocks, to you name it. And you want to get to the source, but then you also want to do your own research to, test out your thesis. And I think that makes a difference. And then put your conviction there. When I bought HubSpot, because Benzinga uses HubSpot, I called other companies, said, what do you guys use as your marketing software? What do you use for your CRM? And then I look at emails that I get. I look to see when I hit the unsubscribe link, what software they're using. Are they using HubSpot? Okay. Then I looked at the numbers in HubSpot. I looked and I didn't like that. on the Benzinga tool where it says insider buying. I didn't like that the insiders are all selling. So I bought less stock of HubSpot. I bought a nice position. I told you 20 units, but I should have bought, I guess, more in hindsight. But I bought it because my direct experience with it. A lot of us on this call, like 200 people here right now. You guys have interact with things all day. What do you think is people aren't noticing? Like tweet. Like I'd love for you to tweet at me and tell me what are things that you're seeing that people aren't noticing. What are things that you're seeing in your community or things online or are people buying Salesforce again or like what are those things? Like though that's how I look at sources. And then for like Benzinga, we pay attention to Twitter. So someone posted, I forget some stock, some deal happened this morning, and he posted like derivative trades, like it's sympathy plays. I'm like, cover that. There's some good ideas there, and we did. And it's like we do look at Twitter. We look at Twitter to find interesting concepts. Here, I'll just give you that last one that I posted this morning that I found on Twitter because I thought the guy had an interesting concept. And I think being open to, but also understanding that people do have agendas, like, and so you just got to be careful. But like, I thought this concept what this person had, I want to see if I can find it for you guys right now. The deal that happened, hold on, I'm almost there. Oh, here it is. So OSH, CVS is buying OSH, and it was and for $39 cash, and it was still at 35. So there's a little arbitrage play there. And then you could look at these other three stocks: CANO, TLK, DRIO. I think there's, you can get ideas from people who are not necessarily sources, but who are commenting on these kind of things. And the last thing I'd say is you also can invest in mutual funds and people that know their stuff, like what you do. I mean, just hearing your questions, Michael, you said it's about the questions, sometimes not the answers. Hearing your questions just shows me how passionate you are about investing. And you take this not as just a hobby, but a full-time job. And so you're going to have an edge over the average person. Just you are. And this is what you do. I mean, I think there's huge advantages with that as well.
I appreciate you saying that. Anyway, I think it's a good place to end this space. Again, everybody, please make sure you follow Jason Raznick. Check out Benzinga as well, Benzinga Pro, if you're curious. You show some love, some engagement to him. Appreciate everybody that's joined. Thank you, Jason.